Good morning, everybody. It's Christian from Serene Education with the 4 Majors Notes update for the 28th of March 2013. Welcome to this morning and another look at the 4 majors, starting with the euro against US dollar. Let's have a look and see what's been happening over the past couple of days. And you can see that clear break on the, what was that? So this is Thursday, Wednesday, Tuesday, Monday. We had a nice bearish engulfing candle close below Monday, and subsequently Tuesday we saw the pullback at the underside of the institution. Now for the first time in as many months, we've seen price trading below the institution moving average. You can clearly see here the last time we were below was back in November of 2012. Since then, price has been above the institution and steadily moving to the upside. Capped here in February, bearish engulfing candle, and price has been reverting to the downside, making its way to these price support and resistance levels, but all importantly to the institution moving average. Consolidated at the institution moving average near term for a number of days, almost a full week, and we wanted to see if this was still to remain negative, the intermediate trend to be negative. We still wanted to see that bearish break below that institution moving average, and we got it, and we saw a pullback, a spinning top, indecision candle at the underside of this institution moving average, and yesterday's movement took us lower towards that all important 1275 mark, 12700. That's our next target, which happens to be way back here, or the November low that we saw back here, 2012. So 12700 is our next target as we speak. So as it stands now, we've seen some consolidation over the Asian session. Let's have a look and see that on our 4-hour time frame. There we go. You can see the break lower, moving to 1275, and then you can see quite clearly since 9 o'clock GMT last night, price pretty much coming unstuck, and then through the Asian session, a slight pullback on the pair, going into the European session open right now as we speak. So this morning's candle, starting at 5 a.m. GMT, you can see the pullback. Hourly charts still looking negative across the board. Institution above price, the all-important 1300 above price. As I mentioned, that's the long-term weekly support and resistance level. You can see the consolidation, which ended up being that spinning top on the weekly. We wanted that to move away from price. Sure enough, we got it when price broke just below here, this little consolidative range here at roughly the 128500, and price breakout, pullback, and then the continuation lower. So as it stands now, we're seeing a slight consolidation as price takes profit. As long as price remains below that 128500 mark, then we should be ultimately looking for price to continue to the downside. So as it stands at the moment now, look for potential trades to the downside by looking for a close below 1277. If price had to get back above 1285, expect a bit of consolidation before we head towards that institution moving average. But as it stands now, we should be looking for negativity, because everything intraday and long term has been telling us euro is looking negative at the moment. So look for any potential shorts in the direction of the trend. So ideally, I look for a close below the 1277 mark to start with, and head towards that all important 12700, which is a good 70 pips below that. So be patient, budget time. Look at the news to see if there's anything out there that's going to really factor in. Today is Thursday, and do we have anything on euro? Yes, we have the German unemployment change figures coming up soon. We had German retail figures this morning at 7 a.m. GMT, and that was far better than the prior, or for the forecast, and which is good for euro. So hence the reason why we've seen a bit of movement to the upside. We're going to have a look at the German unemployment change figures. That's going to be quite interesting. And then we go into a lot of US news this afternoon, followed by the Kiwi and Aussie, and then the yen. Tomorrow is Friday, so it is a bank holiday, Easter weekend. It's Good Friday, so there's no markets tomorrow, so it'll be closed. So see a bit of action today. We can capitalize on that. Tomorrow is not going to be any physical movement tomorrow because of a lot of the markets being closed because of Good Friday. So take advantage of it today and see where it takes you. On to sterling against the US dollars. Look at the weekly. Price broke that all magical 15,300 mark, which happened to be that long-term yearly support and resistance. 2010 support through August, right through to now. Currently, we saw a nice bearish engulfing candle through the latter part of February, and subsequent since then we saw a slight pullback, but price managed to rally or fall near term towards that the 1485 mark, which happened to be the prior consolidation here in March 2010. And since then, we've seen price bounce to the upside. Now it's come unstuck at the underside of 15,300. So we had the breakout. Is this the pullback? And now we want to see a continuation in the direction of the trend. We would need to see some sort of bearish engulfing candle now. So if we look at our daily, You're seeing a lot of hesitation as price has pulled back at that 1485. My 15300 is there, so you can see it. That's my long-term support and resistance level. Price has broken that. So now we're seeing this pullback towards the 1500. However, you can see the intermediate trend now is looking like it's going to come into play with this pair, and you can see over the past couple of days slightly moving to the downside very tentatively. However, as long as she's being resisted here in this area, we should be looking for price now to gain a bit of strength now and to move further. Ideally 1505 would be our next target. This is consolidation. Get below that, then we have a bit of clean air towards that 1485, our near term support that we had. Get below 1485, then we should be looking to that 14200 mark below us. So as it stands at the moment, now intraday should be looking to see if there's any negative sentiment. You can see on our 4-hour price has pretty much fallen apart since that reattempt at that 15300. Didn't even make it, only went as far as 152,500. People took all their profit out, and the liquidity pretty much fell to the downside. Since then, you can see we've seen lower swing low, swing low. Prices pulled back now at the underside of this current consolidation breakout that we saw yesterday. So if we extend that, you can see prices now testing not only this prior consolidation here, but also previously was a 50 period support. Now it's the 50 period under resistance potentially. Negativity on the other side on the 4-hour. Let's look to see if price can actually in the next 4 hours be pushed down. So we have a nice elongated candle with a lot of wick to the upside and more body at the bottom end, so telling us this is clearly an exhaustion candle and looking for further lows. So we would test our current low, which is slightly here, not too far off, but ultimately our low would be here at 1505. There would be one here at 1510, a really quick aggressive trade, but ultimately if we see a failure here near term on the 4-hour around this area here at 1500, then look towards that 1505 mark below us, which is the institution. Prices actually helped pair over the past couple weeks in particular at this level, so that would be a great target near term. On to the US dollar Swiss franc. Let's have a look at this particular pair. Really gaining a bit of strength now. Prices really moved sideways. It has very consolidated above the 940, which happens to be a price support and resistance, but also above the institution. In the daily here, price really moving sideways, not really getting out of this mode, consolidative here, but all importantly above the institution. As long as price maintained above that, and we failed to see price breaking below and closing very negatively below 940, there was always the likelihood of price moving higher. The US dollar has been gaining strength against most of its currency crosses, and sure enough, you can see the daily is very much extended blue on either side, and you could see a couple of days ago we saw a nice bullish engulfing hammer formation on here after a lot of indecision, and that has just seen price now moving forward. We saw a lot of movement yesterday in particular, but coming unstuck as we head into this the current highs. Here we go, body highs, and you see price now pulling back. If it pulls back and remains above here, there's going to be the breakout, the consolidation pullback, and then the continuation to the upside. So that's what we're waiting for now, is that consolidation support, and then we could target the next level up, which would be roughly around here, just short of 960, just above it. 960 I'd go for, which happened to be the prior consolidation on our daily. So it's a nice target. There's 70 odd pips and extra to the upside, but there's definitely 50 pips there to be taken if and when we get that nice move to the upside. So intraday we should be looking for the consolidation. You can see on the 4-hour now, so consolidating as after the break that we saw. There we go. Price has tested the prior high here, consolidation high at 1555. We've seen a pullback now, a lot of indecision candles on our 4-hour. Not really much happening over the Asian session. However, we want to see price now maintaining above 950. As long as it maintains above 950, there's always going to be the likelihood of price is going to be pushed higher. See the intermediate trend on our 4-hour moving higher, all the moving averages below price, including the all important institution. Let's see if we get that bullish engulfing candle coming to the party first thing when the Asian and the UK session opens. You can see there's more price action at the top of this wick now, the 4-hour candle, and our hourly should also show that. You can see it's moving higher, very indecisive. Two parts to our strategy that look negative is the fact that we have a red arrow, red candle, but the sentiment on either side is telling us we should be looking for that buying sentiment. So let's see what happens. Something should be happening now because we've had a swing high. We are in this area now where price should be doing something. As long as it maintains above 950, it's still in positive territory. Okay, so if you get selling opportunity here into 950, wait for the close and close lower than the 950 before pulling the trigger downside. If we get negativity here across the board and we're going into this 950, then we should be looking for potential support because we are still above a major support and resistance level. We don't want to be selling into a support. Rather wait to see the break of the support and then trade lower. So wait patiently, see if we can get a nice bullish engulfing candle here, then target the upside for this particular pair. Last pair of the day is US dollar Japanese yen. Price breaking above that all important 94, which is the 38.2 Fib retracement from our 2007 highs on our weekly to our lows we saw through 2011 and 12. Price has managed a very, very strong run through October, well, September, October, right through to where we currently are. A lot of hesitation here at 94, which happened to be the 38.2 Fib retracement. Break higher very aggressively, but we've seen consolidation over the past couple of weeks. This consolidation has taken us back towards the other side of the 94. So prior was the resistance side, now we're seeing the support side. Yeah, last week very negative indeed, but finding support nonetheless at 94. Not really closing low in the 94. So now what we want to see now, that's an indecision candle, a lot of wick on it. We want to see a bullish engulfing candle to confirm, or a hammer, nice positive candle on the upside of 94 at the close of this week to confirm to us that price is happy now at the other side of the 94, at the positive side, and we should see price heading up towards first these 96.50 mark where we've just come from, and then towards that all-important high at 1,000. So as it stands on the daily, you can see price after the break here, early part of March, pretty much coming unstuck at 96.50 and subsequently falling back to 94. A lot of hesitation over the past couple of days. Price very indecisive at this level. We had a spinning top, doji, and we've seen a bit of bearishness through the Asian session last night, hitting back into 94, but a very small range, not really wanting to go through 94. Prior resistance, is this the new support? We would need to see the US dollar gaining strength near term very shortly. If we don't, there's more likely to see more negativity flowing through, and then price is going to break this level. So very important, we want to see a nice bullish engulfing candle. Look at the news. We've got unemployment claims this afternoon, final GDP quarter-on-quarter figures for the US market, which actually could factor into that. They're expecting growth. We've seen a lot of growth in the market for the US dollar. Are we going to see some really great or some fantastic quarter-on-quarter GDP figures? Hopefully that should pan through. Remains to be seen. So tomorrow being a bank holiday because of Good Friday, we're going to see any liquidity to this for the end of this week. It's going to come today. So let's look out and see if there's anything out there that's going to factor. GDP month-on-month figures for the Canadian markets, that could also play suit. They're also expecting a fantastic figure there for the Canadian market, GDP month-on-month. So it'll be one to really watch out and see how things go according to what the markets, the fundamentals do today. We could see that bullish engulfing or bearish engulfing candle formation today. So let's keep an eye on that. 4 hour, you can see that negativity, swing lows, prices trading below the institution, but it's still, even though it's negative, you're seeing a lot more red now on my 4 hour candle chart. You can see before a lot of blue, so it's telling us we're very much an upside trend. Now we're seeing a lot more red and very little blue. It's primarily because we've seen that pullback. It's still, however, above the 94. So, excuse me. So as long as it maintains above 94, even though we've got negativity here, like red across the board, which is what we want to see in our template to tell us we should be selling, we're selling into a major support, which happens to be the 94. We don't want to be doing that. We're putting far too much risk in our favor. So it's far better to see a bearish engulfing close lower. See how we saw price on this particular candle not too long ago on the 4 hour trading very well below the level. However, not closing lower. Okay, so I think a lot of people here got caught out, going short on the US dollar against the yen and having all that taken away from them. So you've got to be very, very patient. Wait for a physical close. Rather not trade anything when it's trading into a major support and resistance level. Rather let the market do its thing, and when it presents its hand, i.e. bullish engulfing or bearish engulfing, then we apply our rules and we trade accordingly. Okay, so don't speculate. Rather wait for the candle confirmation and then trade the confirmation. Okay, so at the moment now the 4 hour at support, the hourly at support as well. So we're going to have to be very, very patient. Be very, very patient here. Wait for the signals to present themselves and then take that on board, and then we move with it. Okay, so US dollar Japanese yen, no trade as such until we get either bearish or bullish engulfing candle, primarily on the 4 hour in my case, because I'm trading longer time frames. You can be very aggressive on the smaller time frames, but you don't want to be faked into any trade. So when you're trading at major support and resistance levels, it's far better just to give the day back to the market and wait for clear decisiveness. And then the new week, next week, we can look at it and approach it with the same manner, and we know exactly where price is likely to go to, and then we can do our due diligence and then place a trade. So on the US dollar Japanese yen, for me in particular, not looking for any buying, for any opportunities as such until we get a genuine confirmation in which direction the price wants to be going to. So that's it, guys. Short and sweet. Hope you have a fantastic day today. Just have a look and see if there's any news out there that's going to play into the hands of the market. Tomorrow's bank holiday, as I mentioned a couple of times. We're only going to be seeing a bit of any liquidity in the market we're going to see is going to be today. Tomorrow is going to be closed. Majority of the market is going to be closed because of the fact that it's Easter Friday. So be aware of it. Don't expect to trade tomorrow and see a lot of liquidity out there because it won't be anything. So make the most of it today. Monday is also another bank holiday, so a nice long weekend for some of us. And let's see what happens from the market today to see where it takes us for the new week next. So enjoy it. Have a fantastic Easter weekend with family and friends, and I'll see you next week, Tuesday. Until then, you guys trade serenely.